I'm looking at your notes, and I find myself, I think we dwell on media a lot. And it's okay, we're in the media. Does the rest of the world care? I think they do, don't they, the rest of the world?
Absolutely.
You sure?
They're popular investments, Joe.
Like if you come out of school, you don't want to be a steel analyst, I don't think. Do you, Tony? I think a media analyst is like probably a consumer good. I mean, it's just interesting. Let's talk about your top three picks, and our parent company is one of them. But let's start with another company that we know well and a CEO we know pretty well. You like Discovery, and that's different than a lot of media. It's smaller and it's more niche, and there's some news recently about Discovery as well in golf.
Yeah, I mean, Discovery, they like to talk about passion programming. You know, Golf Digest is just another one of those things that they can add to their portfolio where they can, feed that cult base that they've got, of viewers. They've got the best portfolio of non-scripted television programming, right? They control and own their content. They don't have to pay highly paid actors and actresses out of Hollywood. So they've got one of the best margins in the business. And they are ubiquitous. They can be anywhere. They can distribute through anywhere. And so they're populated on most all the OTT platforms out there. And by the way, they trade at something like 7.5 times forward earnings. So I understand you'd rather be a media analyst than a steel analyst. But there's not a lot of love for something like Discovery right now, and if you look at the valuation multiple, it's very cheap.
People wonder what, Zaslav, for one reason or another, did that big acquisition, but still maybe not big enough to stay independent forever. But I guess that's the knock on Discovery, is it's about the size, right?
Well, it's interesting you say that. We hope that it doesn't get taken out from under us. We own it. It's our top name in our portfolio. We'd like to just continue to own it for a long time. We think that's the best way to compound money right now, versus it getting taken out. But, the content that it has, you're absolutely right. It would be a great acquisition for somebody out there. Don't tell anyone I said that.
All right. I'm not sure how we have the stack built, but you were going to do Disney next, but I want to do Comcast next. Because of this one sentence here, because you could, Wilf, I'm going to say Comcast, but you could substitute Squawk Box for Comcast here. But what he says is Comcast should be considered a consumer staple. We can't live our lives without it. It's the drug delivery system for all of the above, and its core cable business is growing and, more importantly, has pricing power. More than half the value of Comcast stock, and then the NBC Universal is the second crown jewel for Comcast. So you see why I want now. Do you think I could put Squawk Box? Do you have a problem with that, Tony, if I put Squawk Box?
I don't have a problem with that at all, Joe. No.
Okay. All right, well, let's talk Comcast. I mean, those are, I said you don't want to cover consumer staples. It sounds like, in this case, you actually called it a consumer staple.
Well, look, it would go into a recession-proof portfolio if you wanted to try to build one. It's the drug delivery system for all the stuff we're talking about. Especially as streaming turns on, the OTT platforms that are going to proliferate. Netflix has been a first mover. Congratulations to them. But there's a lot more that's going to get streamed as we go on here. And Comcast, with the rollout of 5G. They're going to be clear winners in that. I mean, you are not going to be able to live right now, you can't live your life without having that as your main thing that you view, your tablet through, your phone through, when you're at home, and certainly your TV through, and everything on the internet. So, and Squawk Box, Joe, is a staple. Yes, okay. Sure, absolutely.
I guess, you got anything else to say about Comcast, or should we move on? I guess we could move on to Disney if we must. Anyway, no, Disney, it's a great company, obviously, with a great CEO. It's up, trading at some all-time highs recently and up about 30% over the last year, the one-year return, which just trails Comcast, in fact. But let's go ahead. We have time. Let's talk Disney.
Doesn't sound like you want to.
No, I'm kidding. We're frenemies. We're frenemies.
And the deal that links Disney and Comcast.
And Hulu, which you can talk about both with what happened, because I wish we could get a China deal like that. That looked pretty good for both companies, didn't it?
It looked great. Yes. It looked great for both companies. So Disney look, they've been slower to build out their OTT offering, right? but they're doing it, and they're doing it successfully. And now with this deal where they own the operational control of Hulu, they've got this trifecta, right? I mean, ESPN Plus, Disney Plus, it's going to get rolled out for $6.99 a month starting in, I think, November. And then now Hulu. I mean, they're going to have massive inroads into your life, into the life of the consumer. The consumer seems to like the OTT, the streaming media. They're going to have it, right? And better yet, they have the content by which to populate the things you're going to watch through those chassis out there. So no, and Comcast, we can talk about that too, but Comcast is going to win in this game as well. We like them both.
Tony, just quickly on Comcast, long term, is there ever a threat that cable gets hit because of ever-improving mobile technology?
Well, not anytime soon. They're increasing their moat. They're increasing their market share. They have pricing power. Sure, 5G is going to be a thing, but as the bandwidth has expanded, the demand for that and the ways that you can utilize that has increased, exponentially. 5G is just going to be another story there, and we think 5G is going to be really a very big thing. We believe it's going to roll out faster than what some may assume. Michael Fries from Liberty would tell you that it's maybe 3 to 5 years. We're all going to have a 5G phone in our hand. So that's a great story as well, but that doesn't mean that Comcast is going to get marginalized by that. You're still going to need that for everything you do in the places you live and outside of that, too.
Tony, your top 3 picks, all sort of traditional media companies. Does that mean you think Netflix is overvalued?
Wow. Absolutely, we do. Netflix, look, in this Hulu deal, they look to us like a sitting duck. They were the first mover. They created a great, widget out there that consumers like. But this is, think about business 101, supply and demand. The offerings, the choices you're going to have available to you are proliferating. As an example, the #1 most watched show on Netflix is The Office. Well, who owns that? It's NBC Universal. Look what Disney did 3 years ago with Netflix. They started tapering back on the content that they offer to Netflix, and they've done so in a meaningful way over the last 3 years, and now they're going to have their own way, their own direct-to-consumer. I don't know. If I were NBC Universal, wouldn't you do the same? Wouldn't you peel back on the content that you have available to Netflix out there? Friends, I believe, is the #2 most watched show out there, and Warner Brothers is going to have their own direct-to-consumer as well. So Netflix needs to keep on the treadmill of spending money and throwing money to Hollywood to try to continue to have new content to maintain its subscriber base. It does not sound like a great business model to me, and they burn cash each and every year.